Hi all, thank you for watching Catholic Super's presentation on the value of contributing to super. My name's Melissa Cardwell. I'm a relationship manager that works for Catholic Super. The presentation will take approximately 5 minutes, and on the last slide I've left my personal details, so if you have any questions after the fact, feel free to reach out and contact me directly. Okay, so this is just a general disclaimer saying that the information provided is of a general nature only and does not take into account your personal circumstances. Why contribute to super? Okay, so there are studies out there that indicate that what the employer puts in by itself will not be enough for you to sustain or have a comfortable retirement. It used to be 9.5% superannuation guarantee, but from the 1st of July 2021, that's actually increased now to 10% of your gross salary that an employer is required to pay into your superannuation account. Sadly, that's still not enough, so you do have to make up the difference. They say overall around 15% of your gross salary through your working career should be directed into superannuation. But the benefit of actually contributing as well is that there are huge tax savings, so it's a great way to get your taxable income down when you do your tax return. And the other advantage as well is whatever your money has grown to when you do get to retirement is a tax-free lump sum for you to do with what you want. There are two types of contributing, before tax as well as after tax. We're going to be focusing on before tax or salary sacrifice and the benefits of doing that. Okay, so this is just an example on how salary sacrifice works. The example is Sarah. She earns $77,000 per annum gross. If she was going to salary sacrifice or direct $100 per week into her superannuation account. So on the left-hand side, this is her current circumstance if she takes it as cash. So it's $5,200 gross annualized, and then if she took it just paid her PAYG tax of 32.5% plus Medicare, net after benefit is $3,406. And she can do with that what she wants. She can spend it, she can put it on her mortgage, she can invest it. If she redirected that $100 per week into super, so again, annualized gross of $5,200, she actually only pays 15% tax rather than her marginal tax rate. And then net after benefit, after tax is $4,420. So as you can see, there's just over $1,000 difference in tax savings that's actually going to get invested for her. The only downfall, I suppose, is that if you start salary sacrifice, that money can't be touched until retirement. It is flexible, so if you start and your circumstances change, you can switch it off, increase it or decrease it. It's just what's gone in that you can't touch. And this example is based on income that's earned between $45,000 and $120,000 gross. Okay, this is just stemming onto that example, the value of compound interest or putting in a small amount over a long period of time. So again, Sarah's 25, earns $77,000 per annum. If she put in 2.5% of her wage from the age of 25, as you can see, there's over $100,000 difference at the end. $74 gross per fortnight, it's actually only $50 net from her take-home pay per fortnight that she will see a reduction in. So a small amount over a long period of time can actually make quite a substantial difference. If you haven't started, it's never too late. Please remember there are still huge tax savings of putting money into super, and the more that you can get in, the bigger the outcome will be when you do get to retirement. Okay, the First Home Saver Scheme. So if you weren't aware, you can actually save through your super for your first home. If this is relevant or you want further information about this, I would suggest that you contact me individually. Again, you can salary sacrifice under this scheme, and it's voluntary or additional contributions, not what your employer is putting in for you. You can put in $15,000 per financial year with a maximum of 30. From the 1st of July 2022, the government are looking at increasing this limit to $50,000. All right, so there are, of course, limits on how much you can do. The limits have since increased from the 1st of July 2021. The before tax contribution cap now is at $27,500. That includes the 10% superannuation guarantee that the employer is paying, and includes salary sacrifice as well. And then there are after-tax caps as well. If you've got money sitting in a bank account that you're hoping get you a better return, you can put in $110,000 per financial year, or potentially bring forward 3 years. These are subject to limits and ages as well. So next steps, look at our website, csf.com.au, for further information. Please contact me directly if you want any further information. If you decide you want to start salary sacrificing, you need to speak with your payroll department, and they'll either want a form or an email to confirm this. And I thank you very much for watching. Cheers.